Welcome to today's Business Report. I'm Denise Williams, bringing you the developments shaping markets, capital access, and business decision-making across Jamaica and the region. Let's get into the stories that matter. Jamaica's export earnings fell sharply during the review period, with the country earning US $376.6 million from exports for January to March 2026, down 22.3% compared with the corresponding period last year. Jamaica spent nearly US $1.9 billion on imports during the first quarter of 2026, while earning less than $400 million from exports. New data from the Statistical Institute of Jamaica, STATIN, show the total imports from January to March are valued at US $1.8 billion. That represents a 1.3% decline from the same period in 2025. STATIN noted that the reduction was primarily due to lower spending on consumer goods and fuels and lubricants, which declined by 2.4% and 10% respectively. STATIN says the decline was largely driven by a 48.7% fall in the value of crude materials, excluding fuels. The Bank of Jamaica is set to remove another 35 billion Jamaican dollars from circulation on Wednesday through its 5.75% per annum certificate of deposit. This forms part of the central bank's efforts to manage liquidity in the financial system. The certificate of deposit is the central bank's main tool for liquidity management. The instrument will mature on July 24. For the trading period of June 24, 2026, the most actively traded securities were Kentire Holdings Jamaica Limited with 17,570,074 units, representing 37.43% of market sales activities. JMMB Group Limited 9.5% with 13,736,913 units, representing 29.27% of market sales activities. Trans-Jamaican Highway Limited with 3,684,419 units, representing 7.85% of market sales activities. Investor activity remained concentrated in transportation and distribution plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for June 24, 2026, Forex traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $158.19 and buying at $156.66. For the Canadian dollar, moderate gains supported by $1.17 transaction spreads. The Canadian dollar sold for $112.15 and was bought for $110.98. The British pound had continued volatility, offering short-term trading opportunities, $6.88 in profits for the banks. The British pound sold for $210.87 and was bought for $203.07. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, when you look at your credit report, consider that it offers a planning opportunity. Financial recovery starts when we stop asking, "What have I lost?" and start asking, "What resources do I have available today?" Before making a major decision, I would recommend the following. First, obtain and review any and all divorce and property documents. Then determine the value of every asset in which you own. Clarify any legal rights to jointly own property or future proceeds. Create a realistic housing budget based on current income. Evaluate all housing options, including downsizing, relocation, or temporary renting. Preserve cash reserves for emergencies and retirement needs. Because financial recovery requires a different approach even with your credit report. The objective is not to win an argument with reality. The objective is to create stability. Recovery is about moving forward with purpose. In our funded and focused feature, one of the biggest mistakes single-parent entrepreneurs make is believing they need higher income before they can build cash reserves. In reality, cash reserves are built through discipline, not income alone. So start with these 3 steps. 1. Save a percentage of every payment received, even if it's only 5%. 2. Separate your reserve funds from your operating account so they are not spent on day-to-day expenses. 3. Increase your reserve contribution every time revenue grows. Think of your cash reserve as a growth fund, not just an emergency fund, so that when a new contract appears, equipment needs replacing, or a marketing opportunity arises, cash gives you the ability to act immediately rather than borrow money or miss the opportunity altogether. As a single parent, financial resilience matters. Your business is not only supporting your entrepreneurial vision, it is supporting your family. Start small, be consistent, and let your cash reserves become the foundation of your next growth stage. And that's today's business report. I'm Denise Williams, bringing clarity to capital, markets, and strategy. Until next time, stay informed, stay intentional, and keep building forward. See you soon.